Hi, Ron Benning here with the Sacramento Duplex market update for the period ending October of 2025. In this video, we'll look at key developing market trends and what the target break-even GRM is for a Sacramento duplex. These trends will help you understand where the market is and where it's likely to go over the next couple of months. So watch to the end to see what is likely to happen. October 2025 was a seller's market for Sacramento duplexes, with the month supply of inventory sitting at 2.6 months. We are still in a strong seller's market for Sacramento duplexes, at least according to the month supply. More on that to follow later in the video. If you're not already subscribed to my channel, please subscribe now so that you never miss an important update, including my new cash cow alerts, where every alert will have a property with a positive cash flow on day one. Next, let's take a look at the sold duplex listings trend. October had an above historical average sales of 31, which was up 24% over last year, but down 29.5% from September's 44 sales. So what's causing this? I'll get to that in a minute or two, but let's first look at the pending sales buyer activity. We had 34 pending sales in October compared to 40 pending sales the previous months. So we are seeing a weakening demand for both pending sales and closed sales over the last 30 days. It's difficult to have any meaningful understanding of these two trends, also considering what is going on in the active listing inventory trends, since the market is driven by both supply and demand. When it comes to the active inventory trends, active inventory has fallen significantly over the last 3 months. It peaked a few months ago at around 130 listings and was sitting at only 82 active listings at the end of October. Even though the inventory is down significantly, the chart indicates a slight uptick in the month supply. How could this be possible with inventory down so much? Well, none of these statistics by themselves are accurate predictors of what is likely to happen. But when you reconcile them all together with a few more we will be looking at next, it all starts to make more sense. Let's look at the average list and sold price trends. The average list price has started to go up, while the average sold price has remained neutral and overall, since the beginning of the year, has been in a downward trend. That does not bode well for the duplex market over the next few months. The growing expectation gap between what the average list price is and what the average sale price, the bigger that expectation gap becomes, the higher the probability of a bigger market swing up or down becomes. This is one of the reasons for the slight uptick in the month supply of inventory. This growing disconnect is also evident in the average days on the market, now sitting at 60 days, going up 39.5% from the previous month's 31 days, and up a staggering 93.5% from last year at this time. So what does this mean? To me, it means that most of the realistically priced duplexes that were on the market over the past 60 days sold, and that a much higher percentage of the remaining inventory is priced unrealistically high. This is also confirmed by the average buyer bargaining power for closed sales coming in at 7% in October. This means that listings were selling on average at 93% of the original asking price. When we compare this to 96% last month, so despite tighter inventory, the properties that are selling at more of a discount. For the past few months, mortgage rates have been the primary driver of the market, and they will continue to be the key driver, but maybe not in the way many of you are expecting. Let's take a look at the mortgage rate trends now. As I mentioned, over the past couple of months, rates are down significantly from the beginning of the year. But most recently, despite a couple of Fed rate cuts, the drop in rates has started to level off. In the most recent 30-day period, rates have fallen on average only 0.12 of a percentage point, or around 1/8 of a percent. I believe that is what led to the spike in pending and closed sales over the past few months. But as I mentioned earlier, pending and closed sale trends are now going back down. It is my opinion, and I may turn out to be wrong, that most of the buyers who were on the fence about buying have already taken the plunge, and that those who are waiting for significantly better rates will probably end up being disappointed. Lower interest rates have to be balanced with keeping inflation in check. And in the most recent inflation numbers, we are seeing inflation going back up a bit, and it's hovering around 3% annual rate. So what that means to me, and again, this is just my opinion, is that rates will likely level off over the next 60 days and could actually even go up if the inflation rate continues to rise. Next, let's take a look at the break-even GRM. My lender quoted a client an investor loan of 6.5% with no points this last week, assuming 25% down and an average sale price of $669,000. The break-even GRM this month on a Sacramento Duplex is 12.32. Looking at the sold GRM report that is attached to this video, you can see that there were 6 duplexes that sold with a GRM that would have been at break even or better from day one last month. We can also consider interest-only loans to improve cash flow while raising rents over time. So where does that leave us heading into the holidays? I think there is a reasonable chance that rates will start to stabilize for a period of time. I believe that pendings and sold numbers will likely remain below historical average over the next month or two. A big question is whether we will see much new inventory over the next 60 days, and to a certain extent, the definition of a seller's market may be flawed in this case, since it is defined by month supply rather than month supply of properties likely to sell. Based on the large expectation gap between buyers and sellers on the average list and sale prices, I would expect that the average price will probably be going down over the next couple of months. If rates go up, it will have a significant chilling effect on the duplex market that is already very fragile. For buyers, despite it being a seller's market, there is still plenty of opportunity to buy properties that make sense now. Like I stated earlier, there were at least 6 duplexes that sold at a better than break even this past month, and they were all on my GRM reports. Also, don't forget the 7% buyer bargaining power. So it is about making offers. If you're not already receiving my GRM report, look in the description or scan the QR code on the screen. For prospective sellers, to get an update on your property's value or to get an update on what a fair rent amount is for your property, look for the links below in the description or scan the QR code on the screen. It may be a good time to consider doing a 1031 exchange to reposition your money into other markets, other properties in better areas, or properties in better condition. See a link to the description about doing a 1031 exchange in this way. I just published a video this last week on that very topic. Whether you're planning to buy or sell in the next 7 days or 7 months, give me a call or a text. I'd love to help you plan a smooth and profitable transaction.